Hey guys, CryPTOSICIAN here. So this is a different one. Now this is me doing my weekly analysis for GBPUSD. As you can see, this is the daily chart. Now let me just show you something that happened last week. And this is why we need to think in long term and be able to project price or forecast the direction of the price. As we do our top-down analysis, it's important that we are forecasting over a week, 2 weeks, even a month, depending on how you do your analysis. All right, so now we have this going on here last week. Now, last week we saw this, or 2 weeks ago, on Thursday, 14th of August, we saw a liquidity sweep. So, price, the body of this candle, it didn't break. You can see it here. It didn't break above the previous candle body, but the wick went up above that previous candle. Not just the previous candle, but as you can see, it went above even previous week's highs. All right. So you can see that's a clear liquidity sweep because the body didn't close above the body of the previous day's candle. All right. Now that tells you that last week would have been a very bearish week. And yes, it was. Monday closed bearish, breaking structure to the downside. The same with Tuesday, the same with Wednesday, the same with Thursday. And then price now turned around on Friday after taking this liquidity level here, which is a weekly liquidity level. I'll show you. All right. Now, price will not stop until it gets to the opposing liquidity of the higher time frames. I'll take that again. Price will not stop until it gets to the opposing, when there's a major move, until it gets to the opposing liquidity point on your higher time frame. So when you see a turnaround like this on your higher time frame, you should expect to see price drive towards liquidity. And that's how to tell you where that trend is going to stop or where it's going to end. Now, a similar thing has happened here. You can see that Friday drove down price and took the liquidity, the weekly liquidity level here, almost tapped into that weekly fair value gap or a 4-hour fair value gap as we saw last week. And then there was a change of character and price now rallied very, very bullish, a very strong bullish move. Now, where is the next liquidity point? If you look at this chart, the next liquidity point here is, of course, these highs here. They're going to be buy stops. They're going to be stop losses that are going to be sitting above this level. And then price breaks above. And of course, we can see there's, an inverse head and shoulders pattern that will now be validated after this level is broken. And then there will now be more upside targeting the weekly high here at 137 or around 137. But you can see there's a small fair value gap there. And if you go to your lower time frame, the 4-hour time frame, you see that there's a fair value gap around 137, 130. That would be a good target to take profit after this level has been broken. However, if it's not broken, then we're going to see more downside. So now, why top-down analysis is important is because the key levels that you see in your higher time frames are more valid. They're going to be respected more than the key levels that you see in your lower time frames. And another important thing about top-down analysis is that you can actually now forecast the market for days or weeks and then take trades and hold them for longer periods so that you can target maybe 200, 300, 400, 500 pips on a pair like GBPUSD. All right, so just take your time and look into the market and consider these things and know the direction the market is going to go based on your own analysis and do the needful as you execute during the week. This is by no means financial advice. Do your own research. I'm CryPTOSICIAN and I'm out.